From Kansas State University, this is Agriculture Today. Eric Atkinson with you. And ahead today, K-State's Dan O'Brien is back in for his weekly talk on the grain markets. He'll glance to the 2020 grain production and price projections released by the USDA's Agricultural Outlook Forum yesterday. Also, K-State's Terry Griffin will share some of the observations made at an open forum he conducted at the recent Women Managing the Farm Conference on farm technology adoption and how that impacts on-farm labor. Terry will also talk about an emerging conflict between two farm data services, which Terry believes could be the catalyst for legislative action on farm data issues. And later, K-State's Mary Knapp on Kansas agricultural weather. All right here on Agriculture Today.
Kansas farmers and ranchers are helping feed your family in the world. The largest contributor to the Kansas economy is beef cattle. How do you get that juicy steak on your plate? In order for you to enjoy your tasty meal, it requires the hard work of the producers, marketers, advertisers, processors, inspectors, transporters, packers, and consumers. So thank all these people and sit back, relax, and enjoy your tasty meal.
You are tuned in to Agriculture Today, and thanks for joining us once more. Well, the USDA has put out some numbers to consider as part of its Agricultural Outlook Forum yesterday and continues through today. And those projections have the market's attention, as usual. We'll tie into that information as the core of our conversation now with Dan O'Brien, grain market economist, K-State Research and Extension. So, as usual, a slew of numbers and projections from the USDA yesterday. The specifics will fall into place in their follow-up report today. One thing that they're very clear on, though, they're thinking, or the USDA economists, that we will have more acres of corn and soybeans in this coming growing season, without much question, weather permitting.
Well, yes. The USDA projected corn acres jumping from about 89.7, latest USDA number came out in the January annual crop production summary report. Projected a jump of 5% up to 94 million. Soybeans jumping from 76.1. Again, a lot of that prevented plant, late issues all wrapped up in the problems of 2019 in the spring and early summer. Anyway, from 76.1 up to 85 million acres. Wheat really unchanged to down slightly. Other feed grains up a little bit, and that probably corrals in grain sorghum to some degree in our neck of the woods here. Total cropland planted this year for the 8 dominant crops, primary crops in the U.S. up 5%, and CRP really unchanged. So interesting. I think now, Eric, these numbers, especially the 94 million for corn and the 85 for soybeans, in terms of planted acres, will be the new market standards. And we'll measure prospective plantings numbers that'll come out at the end of March, the acreage figures that'll come out at the end of June, relative to what we thought we'd have back here early on. And so this is kind of the start of primary consideration, really, for what happens in 2020 for crop production, yields, and where markets will go in the fall.
Obviously, these numbers do not directly account for prevented planting or some other anomaly, which could happen once again, but we need to keep that in mind, Dan.
Well, yes. So when you look at the concluding remarks of Robert Johansson, the chief economist for USDA, he says in print that the weather conditions will likely be better. And corn and soybean area would, again, following from that, would be expected to be higher. I haven't seen or heard many climatologists of late predicting anything other than a wet spring again. So that will be an issue. I think just a normal wet spring instead of the overwhelmingly wet spring of last year would still get us quite a bit of the way back to what we expect to see in terms of crop acreage. But that's still an open question as to what we'll see. And again, I think we're banking, and these projections by the USDA are all banking on a return to normality. And chances are, yeah, that's going to happen. But I think we'll have probably more attention than normal, given 2020 follows closely on the heels of 2019 and all that happened there. So we'll see. It's kind of a question, I guess, if people have old crop grain, when might that worry come into the market to start to affect things? Well, last year we were convinced that rain made grain, that we would have no major problems. At least the futures were basically all the way up through mid-May. I don't know. I would think this year, given what we have and the saturation of soils and still some unharvested crops up in the northern states, that we might start to worry about that earlier. Is that May 1? Is that April 15th? I'm not sure. But again, I think we're kind of myopic a lot of times in how we view market news and market happenings in the grains anyway. And given what we just had, I wouldn't be surprised we'd be more sensitive to crop planting threats here in 2020 than we were last year.
That said, accompanying the USDA's projections on production for the major grains, their forecasts on the prices, the average prices, that is, for the fiscal year, and really the one, quasi-shining light there would be the price projection for wheat, Dan.
Well, yes, the USDA has projected a $4.90 season average price for wheat for the 2020-2021 marketing year, and that's up 8% from the $4.55 that they've been projecting. What they just projected in the February report. I think we'll see later on the actual supply-demand balance sheets that come into play, but our understanding is that we'll be seeing fairly tight stocks, at least as tight as we've been since the 2012, 13, 14 time frame when we were dealing with droughts and all other manner of things. So anyway, $4.90 still comes in below the $5.50 reference price for program sign-up. So even with the markets recovering, we still would see that $5.50 price being higher than that. So I guess we'll see. The pace of exports for wheat have been at least decent. That's been helpful. And problems for sure in Australia and some other areas of the world. Perhaps all that will come together, and we'll see that. And I know Kansas wheat producers would welcome higher prices for sure. Corn prices projected to be a little bit lower, again for $3.85, where they're standing right now for this marketing year, to $3.60 next year. They're expecting more acres and average yields. Well, how can we be surprised that they'd expect prices somewhere around $3.50, $3.60 for a cash price? So we'll see. Again, that there's a lot of uncertainty in that. Soybean price projected to be basically the same, just slightly higher, $8.75 to $8.80 for the coming marketing year. Again, the same issues at play with the expectation of a return to normal yields and acreage up. They're expecting an $8.80 price. In fact, if anything is kind of coming through there, it would be the part of the USDA's narrative and understanding for what's coming that they'll be seeing some better trade prospects. And a fair amount of discussion, if a person has a chance to see the discussion by economist Johansson with regard to trade prospects for coming years and what countries they think are going to be possibly affected by some of the recent moves, it'd be well worth seeing. Of course, it's kind of a complicated picture, but for the sake of U.S. ag commodities, strong exports are really a must to, again, keep us from just accumulating stocks and having to grind through periods of low prices.
Well, a number of things considered in the outlook. And back to the row crops, the prospects for corn and soybeans out of Brazil, tying into that trade opportunity for those two crops, well, those look like they're going to be formidable numbers out of South America.
Yes, they broke out acreage, from areas that they had slowed down, or at least had a slower pace on breaking out before, some of the Amazon areas, et cetera. And their farmers are like our own. Once they've invested in that type of an effort, they don't just walk away from that. It takes years of not making money on land on the margin to let it go back to something else. So here we've seen both corn and soybean acres expand for Brazil. That in itself isn't the worst thing in the world if demand for these crops worldwide continues to grow. You'll probably come to a place eventually, if growth continues to happen on the usage side, where you'll need those acres. And we'll need yield increases here in the U.S. to keep up. So again, it's not surprising given the economic incentives that came to Brazil, Argentina, Paraguay, and those areas that benefited from higher prices as the U.S. and China were in the midst of their trade tensions, that they would have invested in increasing their land capacity and their infrastructure and in the longer run, it'll just make for all that much tougher competition for U.S. trade as we go down the road.
And Dan, one further thing that was included in the USDA Outlook Forum Day 1, and you've actually put it in as part of your notes this week, grain operators, producers in this country, according to the USDA, are quite highly leveraged right now. And from the broader perspective, that's something to watch, you say.
Yeah, two items in their financial discussion of the farm economy and policies. On the one hand, they're indicating that farm household income shows that half of all farms earn negative farm income. Well, they don't say by how much. Maybe they're just break even, losing a little bit, et cetera. So it's hard to say, and you don't have the size differentials that you'd really need to have to make a broad statement about commercial farms versus smaller farms, et cetera. There's another piece of information that came out talking about how the percentage of corn, soybean, and hog farm businesses that are highly leveraged has been trending upward. So is that because they've been expanding, or is that because they've had losses in recent years? I guess it begs a deeper look at the data, but to the degree we've seen these price forecasts that the USDA has come out with, and if in recent years with prices at just about these levels, we've been just doing so-so in a lot of cases, again, as costs have continued to go up. Other than the strongly higher wheat price, there's not a lot right yet, that would change the financial picture for a lot of farms. But I would still add that it's surely not a given that higher acreage, strong yields, high production, and low prices will absolutely happen out in the fall of 2020. We'll have to wait and see. But I would think that the uncertainty about whether it happens or not will give us some pricing opportunities on the way there.
Well, again, the charts and graphs associated with all of these numbers from the USDA's Outlook Forum release yesterday are included in Dan's notes, which are, of course, posted at agmanager.info. Dan, much obliged. And next Friday, we'll talk grain markets once again.
Thanks, Eric. Take care.
Dan O'Brien, grain market economist, K-State Research and Extension, along with us from his office in Colby, Northwest Kansas. Agriculture Today continues. After these moments away, this is the K-State Radio Network. For 25 years, K-State Research and Extension's Kansas Agricultural Mediation Services has been providing a no-cost, confidential place to call in and visit with an agricultural lawyer. Our experts are available to help you producers handle legal and financial issues. Explore your options and generate solutions. Call us at 800-321-3276 or visit us online. Kansas Agricultural Mediation Services. Welcome back to Agriculture Today and another conversation about precision agricultural technology and the data that goes with it, as we've invited back by, once again, precision agricultural economist with K-State Research and Extension, Terry Griffin. Principally, Terry, today, because you were a participant recently in the 2020 Women Managing the Farm Conference as a presenter on agricultural technology. We bring this up because you say the exchange of discussion and information during that session was rather intriguing, you say.
It was. So I went to present about how different generations of farm operators utilize ag technology differently, or in some cases in a similar manner. When I present, I always try to have an open discussion, a dialogue, rather than just a lecture, trying to get feedback from the audience members and so that they can participate. And one of the overriding comments from the audience had to do with labor issues. One audience member wanted to discuss how agricultural technology, larger equipment sizes, may have displaced hired labor. And then the debate, kind of the chicken and egg debate, is, well, did the equipment displace the labor, or did the lack of labor encourage farmers to adopt larger equipment sizes?
And there's no definitive answer one way or the other on that, presumably.
Yeah, I have no evidence to support either case, but we do know we have several decades, maybe a century of evidence to suggest that farms are getting larger in acreage, and the equipment is also getting larger over time as well.
But when you get into this side of the question about adaptation of agricultural technology, that's another new wrinkle when you think about the labor impacts, either direction, really.
Definitely. So one of the audience members brought up their concern that unskilled labor is hired to operate very expensive farm machinery. And their argument was, shouldn't we hire higher quality labor to operate $500,000 machines, which I can see the argument. But if we're looking at the USDA statistics, the average hourly wage of hired farm labor, it's in the low teens, maybe $12 an hour, and across Kansas and the Plains states. And when we talk about agricultural technology like automated guidance, section control, well, those technologies actually reduce the required skilled level to operate. So if you remember operating tractors before automated guidance, you had to pay attention more, find something at the end of the road to focus on when you were tilling to make sure you had fairly straight parallel passes. Well, that skill set wasn't trivial. It was something you had to learn how to do, but with automated guidance, that was no longer required of the operator. And you can make the argument that operators with automated guidance have lower expected skill sets.
But as technology in the various forms, be it guidance, be it variable rate applications, what have you, becomes more sophisticated, will it be incumbent to have more in-tune labor, if you will, inherent to the technology?
Sure. We did see a shift in the pool of farm labor 20 years ago when we were adopting automated guidance. So a younger person who's used to playing video games had less of a transition into operating that type of equipment. But some operators who had a difficulty trusting the system and couldn't leave the steering wheel alone essentially became less effective operators. But you mentioned a variable rate. The type of labor that we need to deal with variable rate, yield monitor data, analyzing soil data isn't unskilled labor. I mean, it's almost a management level of skill set. And even some current managers, some farm operators, are reluctant to devote human capital necessary to make higher technology work, such as those we just mentioned. Unlike the automated guidance technologies and automated section control that reduce the required abilities.
So producers looking ahead, Terry, and we're speculating here as much as anything, but looking ahead, are they going to have to be more willing to seek out that higher-end labor pool that can grasp and operate the technologies that emerge constantly?
Well, at the very least, human capital will have to be devoted, whether it's on the farm by the farm operator, their full-time employees, or outsourced to a third party. But somewhere in that realm, there has to be humans that have the ability and capacity to devote to those issues. Today, you could find a lot of groups, law farms who would say, we're willing to do this. And we see that. We see a lot of farms who are making use of technology, but we also see several that are very reluctant. And it may not be this generation of farms that are making full use of it, but maybe after the next wave of farm consolidations and so forth that we'll start seeing ubiquitous adoption of those technologies.
Yeah. Well, in any event, as we go along, there seems to be always something new in the way of an issue or discussion point regarding technology. So, nature of the beast.
There's always something new. If you pay attention to social media, there's been lots of activity this week.
Want to get into that. This has to do with a big conflict over farm data and a couple of players in that arena, correct?
There have been. So the last few weeks, there was a startup called Untillable who has been noticed by farmers. And middle of last week, there were some questions about how they were acquiring information. And by the end of Friday afternoon, Climate Fieldview had made a statement that they were severing the relationship with Tillable, and Tillable made a likewise announcement that afternoon as well. And there was a lot of emotion, and I'm not exactly sure what the truth is, but I do feel like we can remind our listeners that you need to be cognizant about the contracts you sign, even if they're the electronic license agreements. You need to know what you're agreeing to when you enter into these things, especially when it comes to farm data and how data from farm equipment and your acreage can or will be used by third parties and how those third parties can interact with their partners. And not only do we need to be cognizant about those agreements, those contracts, but we also need to realize that for the most part, we should not feel like we're in a hurry. We should always use that basic economic question of, do the benefits of this decision outweigh the costs that I will have to deal with? And sometimes those costs will be not necessarily dollars immediately, but could be lost privacy. And I think that might have been part of the issue last week. But always consider the benefits and the cost side of your decisions.
And you're citing what's happened with this episode as a prime example of how a producer could get caught up in the wake of this dispute. And who knows where this is going. We don't have all the details, but could even cause them to lose full access to their data, perhaps, and something as dramatic as that?
Well, something that's tangible is that Tillable was trying to, let's say, interact with landowners and farmers in their leasing of farmland. And a lot of farmers on Twitter were upset because they were receiving letters as if they were the landowner, and so they were afraid that negotiation power with landowners would be reduced because farm data is a form of a intangible resource. And when that intangible resource is shared such that there is symmetric information on both sides, negotiation power has been reduced. And that is a very real issue, especially in areas that have an active farmland market where farmers are very concerned about losing tracts of farmland to competing neighbors.
Just as a final point on this, we were talking before the broadcast, and you point to this latest development as maybe a catalyst for legislation addressing ongoing and evolving concerns over farm data and big data, so to say?
I think so. Farmers have been implicitly asking for legislation to say farmers own farm data, and this might be a catalyst for that. There will be additional discussions, not only in the private sector, but on the legislative side. And I think this might be the catalyst to accelerate that discussion.
Before we let you get away, Terry, we do want to let folks know, particularly in the northeastern part of the state, but anybody who would like to make it to this, there will be a session on the value of ag data and how to capture it, hosted by K-State Research and Extension, coming up next Wednesday, the 26th, correct?
That's correct. RSVP by Monday. I'm going to present some of my ideas and from my applied research on farm data, protections, ownership, and valuation. And we're going to also open it up for a discussion, which I expect to be somewhat lively and interactive. I welcome folks to come and share their thoughts as well.
That is a great opportunity, producers, and it is taking place next Wednesday, the 26th, at 10 o'clock in the morning in Sabetha. You need to register in advance, though, and to do so, you can contact either the Meadowlark Extension District or the Brown County Extension Office to take in this session on the value of ag data. Terry, thanks for coming over. It's always a good conversation.
Thank you, Eric.
A few moments there with Terry Griffin, precision agricultural economist with K-State Research and Extension. And we'll be back with more for you on this Agriculture Today. Stay with us.
Did you know every Kansas farmer feeds 128 plus people?
Kansas farmers are hard workers, dependable, authentic, and sensitive.
Not only do farmers put food on your table, but they put clothes on your back and fuel in your car.
For more information about Kansas farmers, visit K-State Research and Extension online or stop by your local Extension office. This message has been brought to you by the K-State Animal Sciences Leadership Academy participants.
Now in our 96th year of broadcast service to agriculture, this is the K-State Radio Network and Agriculture Today. Welcome back. Eric Atkinson here. Today's agricultural news headlines for you now, courtesy in part of DTN. Starting with more out this morning from that USDA Agricultural Outlook Forum with the focus on livestock. The USDA forecasting bullish export sales for beef, pork, and poultry in 2020, and record production again in red meat and poultry. The USDA is projecting red meat and poultry production will rise by more than 3% this year to 108 billion pounds. That's driven by record production of beef, pork, and broiler meat. Beef production specifically projected to increase by 1%. That would still be a record 27.5 billion pounds, supported by a larger number of cattle currently on feed and higher cow slaughter in the first quarter of the year. However, beef production, they say, will be higher in the first half of the year and then slow in the second half of 2020 as cow slaughter declines. Heavier cattle weights will also support higher beef production in 2020 as well, says the USDA. Now, while beef exports fell 4% last year, the USDA is forecasting a rebound here in 2020 to a record 3.3 billion pounds, the USDA citing lower production in competitors such as Australia and Argentina, as well as the trade agreements such as the USMCA and with Japan, and lower tariffs in South Korea, all likely to increase beef exports. The 5-area steer price for 2020, they say, forecast at $117 per hundredweight. That would be nearly identical to last year's fed cattle average, and feeder prices are forecast to average $146 per hundredweight, up $3 from 2019 prices. The hog sector has expanded for 6 straight years up to 2019, tying the longest expansion on record, while producers intend to farrow slightly less than 1% fewer sows in the first half of 2020. The USDA still projects a larger pig crop as litter sizes continue to increase 2 to 3%. That larger litter size means the USDA is again forecasting record hog slaughter in 2020. Commercial hog production forecast at a record 28.9 billion pounds. That would be 5% higher than last year. Not only will there be higher hog numbers, but the carcass weights are also expected to rise slightly as well. The U.S. will see strong export demand for pork, according to the USDA, pushing exports 17% higher in 2020 to a record 7.3 billion pounds. And hog prices, according to the Outlook, projected to average $49 per hundredweight. That would be up slightly from the $47.95 average for 2019. And a panelist at this year's USDA Agricultural Outlook Forum says that innovation will be the key in solving challenges in farming, yet could also contribute to challenges in quick adoption. Here's more from the USDA's Rod Bain.
Both a fifth-generation Nebraska farmer and CEO of the Farm Foundation, Sherry Rogie-Fidler, acknowledges innovation will offer solutions to ag challenges occurring now and in the future. Yet,
if we want to increase adoption, we have to address the suite of challenges that farmers are facing.
Speaking within the plenary panel of this year's USDA Ag Outlook Forum, Rogie-Fidler says an additional challenge, along with existing issues like sustainability and increased profitability, is the speed in which new technologies are developing and being offered to producers.
The challenge is, as that technology continues to evolve and there may be better systems out there, it's really difficult for us first to find the time to benchmark them and see, is it really time to switch? The switching costs are huge. And I think it's really important, as we talk about wanting to accelerate adoption, to really understand that suite of challenges and how the farmer is trying to sort through all of these different innovations.
From the Ag Outlook Forum in Arlington, Virginia, I'm Rod Bain reporting for the U.S. Department of Agriculture.
Researchers here at Kansas State University have just completed an extensive one-on-one survey of Kansas wheat producers. Marcia Boswell tells us what they were asking about on this week's Kansas Wheat Scoop. Marcia?
Researchers at Kansas State University are looking to the experts, commercial wheat growers, on real-world best management practices for improving wheat yields in the state. This research gives a snapshot of how wheat is managed and how management practices are associated with yield. This study is supported in part by Kansas wheat farmers through the Kansas Wheat Commission's two-penny wheat assessment. Dr. Romulo Lolato, K-State's Extension wheat specialist, and Brent Janish, a K-State grad student in agronomy, have been gathering field-specific wheat management practices from farmers across the state. The study covered a total of about 700 fields from 3 regions: West, North Central, and South Central Kansas. These regions were chosen because of their similar weather conditions of temperature and rainfall, planting date, seeding rate, fungicide use, and amount and timing of nitrogen applied were management strategies that had the greatest effects on yield. The research shows that planting dates have a huge impact on final yields, but the optimal sowing date varies by region. Western Kansas had a much earlier ideal planting date since it's at a higher elevation and gets colder earlier in the fall. The South Central region loses about 1.1 bushels per day for around 20 days following October 12th, but that loss increases to 2.7 bushels per day after those initial 20. North Central Kansas consistently loses about 2.1 bushels per day, and planting late in Western Kansas meant farmers saw a 3.5 bushel an acre per day decrease in wheat yields. When the researchers compared management practices between high-yielding and low-yielding fields, they noted that more nitrogen regularly led to higher yields in South Central Kansas. However, the addition of nitrogen in Western Kansas did not affect yields. This is likely due to the fact that in Western Kansas there is more nitrogen remaining in the soil that is carried over to the next crop. Overall, all regions saw yield improvements with fungicide application. About 55% of the South Central Kansas farmers applied fungicide, while only 40% of Western Kansas farmers chose to adopt this management practice. When no fungicide was applied, variety rust tolerance became the most important factor for increasing yield. The goal for this survey is to help other farmers get ideas on what methods work and can be tried on their own personal operations. At the conclusion of the study later this year, the researchers hope to put a value on the price of these management practices compared to the return on investment that farmers could see in terms of yield improvement. Overall, farmers will be able to use this information to make decisions that affect the profitability and sustainability of their farms. For Kansas Wheat, I'm Marcia Boswell.
Thanks, Marcia. Well, rain is in the offing for the latter half of this coming weekend. Mary Knapp will tell us more next on Agriculture Today.
When you are in need of timely, reliable, and trusted information, K-State Research and Extension is here. Whether it's organizing people, information, or resources, they have the necessary tools. Community comes first for K-State Research and Extension. For more information and to connect with your county's extension agents, visit www.ksre.k-state.edu.
To round out this Agriculture Today, we've invited back in Mary Knapp, climatologist, K-State Research and Extension, for our regular stint on Kansas agricultural weather. Looking back, Mary, at this past week, we had glimpses of spring, but they were short-lived, and it's a back and forth from nicer conditions to the recent cold of the last few days.
Right. When we look at the week ending on Tuesday, overall we were colder than normal across the state by 3 to 5 degrees cooler than normal, so a substantial cold period going in there. We did have a very mild weekend last weekend, but it was sandwiched between some extremely cold temperatures, so they won out the argument as to whether we were going to be warmer or colder. On the moisture side, it was a fairly dry week for all except East Central Kansas. They had some snow and moisture with the system that came through at the end of last week, and they were actually above normal for the week. Everybody else was on the dry side. So that was basically where we were at. We didn't see a lot of change in our drought monitor. There was some improvement in the South Central area as they did a reanalysis of the moisture that had fallen before. So there was that slight improvement. Not any deterioration in the West. As I said, it was less than they typically get, but there was at least some moisture coming into play. And with the cooler temperatures, there was not the evaporative demand that would warrant a degradation in that area yet.
Now, to remind again, these official observations run up to this past Tuesday. There was snowfall in western Kansas in particular since that time, so that'll be accounted for next week, but that will lend to some relief, won't it?
Well, it might, but looking at the preliminary numbers, while they did see some substantial snow, and we're talking as much as 5 inches in a couple of locations, the amount of moisture in that snow was fairly low. So it's more likely to, again, hold off any degradation than it is to improve the situation. Now, we will have another round of moisture coming in over the weekend that's expected to come in Sunday into Monday, and that will be included in this next week's analysis as well. And that looks to be very productive as far as moisture goes. It is going to be on the milder side for the temperature, not necessarily warm, but certainly not as cold as what we've been experiencing the last couple of days. And it's expected to come mainly in the form of rain. The quantitative precip outlooks for the moisture of that calls for as much as 1/2 inch in western Kansas and up to 1.25 inches or more in the eastern part of the state. Again, very productive for a 3-day rain event, and that's going to be a mixed blessing. We could use the moisture in the western areas of the state, but it will be a complication for anybody that's trying to get calving accomplished. That's not the kind of moisture that we need necessarily at this time of the year.
But once more, this system will blanket the entire state. Everybody will get something in the way of rainfall.
At this point, that's what the outlook calls for. It calls for the entire state to get not just some rainfall, but substantial rainfall, greater than 1/10 of an inch out of that. And that's not the last of the systems coming through.
There's one right on its heels, you say.
Right on its heels, there's another one mainly expected to come in Monday night into Tuesday. So there'll be unsettled weather in between the systems. But the second system is going to have a more northerly component on it, a little bit more cold air, more chance for snow rather than rain, but not quite as productive as far as moisture totals go as the Sunday system.
Well, Mary, the 6 to 10 day outlook then will take us out of February and into March. What's it telling us?
Well, the 6 to 10 day is still favoring that wetter than normal pattern and cooler than normal. A lot of that will be preloaded at that first part of the period, because when we stretch out to the 8 to 14, it goes to drier than normal across the state. Temperature-wise, it's looking like it's going to stay on the cooler side rather than the warmer side. Keep in mind, as we move into March, our normal temperatures get warmer and warmer. So temperatures that were warmer than normal in February will be cooler than normal in March. Again, not necessarily a bad thing. That reduces the chance that we'll break dormancy early and expose the crops to the risk of the normal freeze. We're not looking at temperatures warming up enough to elevate that kind of a problem.
So our winter wheat may well like that forecast.
It's certainly better than having a very mild February and then get slammed in March. That's not the pattern that we would like. If we look at the March outlook, that favors cooler than normal for the month of March. And again, we're going to preload that with cold air to start the month. And it's equal chances on the moisture, equally likely to be wetter or drier than normal. We're getting into the convective season, and that means that we can have these thunderstorms come through and drop a bunch of rain, and what was dry suddenly becomes wet. We'll have to see how active we are for that. So we go into the longer spring outlook, March, April, and May. The models are up in the air. It's equally likely to be cooler or warmer, wetter or drier. Big problem is that it's very difficult to forecast the spring season. In the best of times, the different models that they look at, particularly ones that are driven by the Pacific, whether it's a El Nino or a La Nina, are still neutral, which reduces some of the reliability of those forecasts. It's still uncertain. And they're beginning to send some rumbles for a La Nina developing in the late summer. And again, we'll keep our eye on that and give people a heads up as to how that develops, because again, for us in Kansas, that tends to bring about a very hot and dry fall.
And depending on when that might check in, that could be critical for the finishing touches on our row crops. And Mary, we appreciate your time. Thank you.
Thanks, Eric.
Climatologist Mary Knapp of K-State Research and Extension. Thanks to you as well for tuning in, and please be back with us right here on Monday. Eric Atkinson bidding you a good weekend for Agriculture Today over the K-State Radio Network.